Okay.
Is Aviva on yet?
I'm on. You go ahead. I'm not going to get off till I get through the phone.
Okay.
Oh, okay. Okay, so you're on, but you can't see the material. Is there a way, I mean, Pam, is there a way that you can send Aviva a message? The green link doesn't work on if you're trying to call in on your cell phone.
They're telling me the meeting where you have here.
Let me see the number I dialed. It's 1-877.
I put that number in.
All right, and you use the
I think I can get through.
Okay, we'll give it a few more minutes.
You go ahead. I'm just trying to do this so I can put on the screen and see the material. That's all right. I can use it otherwise. You go ahead.
Okay, Pam, do you want to do a roll call?
I think I'm through.
Okay.
Yeah, I'm on.
All right.
I'm through. Thank you. Go ahead.
All right, Pam, I'm going to ask if you're on, Pam, or Ben.
I am on. Pam is on, but she seems to be muted. But I'd be happy to do a roll.
Good morning. Can you hear me?
There she is.
Oh, sorry about that.
Okay.
Okay,
Okay,
roll
what I'd
call.
like to do, if we can do a roll call, and after the roll call, if everybody can go on mute, unless you want to speak. And I can't see who's on, so this is all new for all of us, so let's see how we can make it work. But if your phones are not on mute or your computer is not on mute, there's an echo sound to it. So Pam, if you can do the roll call, and then we can get going, okay?
Okay, sure. Roll call. Elise Wright,
Here.
Aviva Budd,
Here.
Joanne Ryan.
Here.
Okay, we have a quorum, Madam Chairman.
Okay, and who else is on? I mean, I took some notes before. I think Claire, and I couldn't hear, but Claire and 3 of your colleagues are on. I couldn't get all the names.
Yes, Elise, so it's Claire, and then it's Brian Hopkins, Forrest Stadelbauer, and Matt McCormick from Grant Thornton. There's 4 of us.
Okay, there's 4 of you. And then I heard, did I hear Mike Moriarty?
Yes, Elise, I'm on.
Okay. I just wanted to get a sense of who was on the phone. Okay, so you
And
have a quorum.
Terry Kelly, the interim CFO for the community college, is on as well.
Hi, this is Melinda Cruains as well.
I'm sorry, who was that?
Melinda Cruains.
Okay, I couldn't get that, but Pam is. Okay.
That's Melinda from the system office.
Okay. All right,
Ernestine
Pam, I'm
Weaver's
hoping.
also on the line.
Okay, Ernestine. I'm just hoping that Pam has gotten all those names. So why don't we get started, because we do have a quorum. Before we start with the official meeting, there's just a few things that I wanted to say. First of all, I want to thank everybody for participating in today's meeting. These are challenging times, and I recognize that we're all dealing with a very different new normal. Some of us have been sheltering in place for a while now and cannot be with our family and friends. And that alone can be challenging. For me, Zoom, FaceTime, and sometimes phone calls have become my best friends because it's the only means of connecting with family and friends. And then there is those of us who've been touched directly and indirectly by people who have been affected by COVID-19. I know there are many in my family who are first responders or essential workers who are in various states throughout the country, and that it's been difficult. But I'm confident we will prevail. And then all of this has been compounded by the events of this past week, which has shocked, angered, and saddened many of us. I'm old enough to have lived through the 60s and 70s and participated in protests in high school, in both high school and college. And what's disheartening is that those issues that we protested back then are the same issues that we are protesting today. So for some, I know for me in particular, it's been difficult to focus on the day-to-day business. So I do want to take a moment to thank the CSCU management team, to thank the Grant Thornton team, and to thank my fellow regents for showing up today so that we can focus on our business. This isn't normal times, and many people are not okay. So the fact that you're on the call and you're focused on this is for me, it's a big deal, and I thank you. So just thought it was important for us to acknowledge and recognize that these are not normal times. So I am going to call the meeting to order as we have a quorum. And first order of business then is Claire, I'm going to turn it over to you for the audit planning presentation and discussion.
Thank you, Elise. And I appreciate your sentiment. I could be nowhere as eloquent as you, but I feel the same way and appreciate everybody being here for this. But it's also good to start a meeting like this grounded in what's truly important, which is what's going on in the outside world at the moment. But with that said, I will go through the results of the audit for 3Cs fiscal 19, and then go through the results of the audit plan for FY20 for all three entities. And I have my three managers with me, Brian, Corey, and Matt, to assist with that discussion. We welcome questions along the way. I know this committee is not shy to ask questions, so please stop us as we're speaking to just interject your questions at any point in time. Because the materials were provided in advance, we aren't going to go through every single slide. A lot of the content is what we would consider required communications, but so it's essentially something that we need to provide in terms of information to the committee, but that we don't necessarily have to go into any detail on. If we do either skip over something or only touch briefly on something that you feel needs further elaboration, please again stop us and ask questions. So using the pagination of the PDF of a full body of pages 109, I am going to move to page 2 of 109. So this is again, reporting the results of the 2019 audit for 3Cs. We had a few open items as of the end of I guess that was the Friday before Memorial Day now, on this list, which I'm happy to say the majority of these items are now complete. So we do have the letter from the state AG's office. We received it on Friday, and thank you again to Ernstine for helping facilitate that effort. So I appreciate that very much. We've gone through a final review of the draft financial statements. So I think there might be a few little administrative edits to the version that was distributed as an attachment to this copy. Nothing, you know, dramatic, but just to clean up a few things. In terms of the 3 bullet points on audit procedures, I know Melinda has been working with our team to address these, and I was talking to the manager about them this morning. I think we just have a few wrap-up questions to go, so we'll work on those over the coming days. And then we will prepare to issue, frankly, as soon as those, the 3 open audit procedures around state appropriations and the 2 GPA items, as soon as those are resolved, I would like to say by Friday of this week, perhaps maybe early next week at the latest, we would issue our report on the FY19 financial statements for community colleges. We will issue an unmodified opinion, which is to say it will be a clean opinion on the financial statements of the organization. So just moving on to the next few slides where it talks about the significant risks and other areas of focus. You know, our plan, I would say at a high level, if you think back to actually the meeting that we had about a year ago when we presented our plan with respect to the audit of the fiscal 19 3Cs financial statements, we presented our plan to the audit committee. We executed our audit essentially in accordance with our plan, albeit the timetable was dramatically altered, but in terms of what we intended to focus on, the significant risks and other areas of focus, that didn't dramatically change from what our plan communicated to this group. So just moving to page, let's see, page 7 of 109, where it talks about other required communications. There's an item in bold about halfway through the page where if we have significant difficulties encountered during the audit, you know, I think in the case here, I think we can all attest to the fact that, you know, management and Grant Thornton in particular, that it wasn't the easiest audit process to get through. I think we shared with the committee back at our meeting in, I believe it was January, you know, that there were several factors that were contributing to the challenges and the delays that caused the audit to not be completed in a timely manner. You know, obviously we're now pretty much done. So in the end, it's been resolved. And, you know, we've talked to management about what will be different this year. I think several things will be different, and I think management is prepared to elaborate a little bit more on that with the committee if you so choose. But we're looking forward to turning the page. I'm now on page 9 of the presentation, and I'm just going to ask Corey Saddlebauer, who is the manager on the 3Cs FY19 audit, to just touch on this one. You know, there was, actually, before I have Corey talk about this one adjustment, what I'll say is, you know, management booked a number of adjustments to the trial balance, you know, sort of during the course of the audit in, you know, the pretty significant adjustments. None of those are reported because they were adjustments that management made, and we knew that the trial balance that we were provided was a very preliminary trial balance, and honestly, there were multiple versions of the trial balance that we were provided, and management was helpful in terms of explaining what were the entries that were recorded and why, and you know, what accounts it impacted so that we could follow along. So we didn't, none of those are reported here because they were management adjustments and they were communicated to us. This one adjustment is related to GPA, as everybody remembers. This is the magnet school associated with the Manchester Community College, where because of some unique terms and conditions regarding the relationship between, the contractual relationship between Manchester Community College and GPA. That one magnet school is reported on the financial statements of 3 Cs, and we did have one audit adjustment associated with the trial balance of GPA. So Corey, if you can go into that a little bit further, that would be helpful.
Sure. Good morning, everyone. Not a ton of color around what Claire indicated. I think what we saw here is just a kind of a debit balance sitting in a payable. So really all this entry does is just recognize that that's actually really a receivable. So it just grosses up the receivable from Manchester Community College, and in turn it grosses up the payable because the payable is being offset. But, did want to highlight that this is related to GPA, which is why you see such a smaller dollar amount than maybe what we'd be talking to you guys about with respect to 3 Cs. Any questions
So Corey,
on
do you want to talk about? Oh, go ahead. Sorry.
No, I was just going to pause and see if there's any questions on that. And if not, I can transition into the internal control matters. Okay. So I'll transition to slide 10 and 11 here. And I think slide 10 is really just kind of a reminder of kind of what our professional responsibilities are with respect to this audit engagement, right? So we are not expressing an opinion on the effectiveness of it.
Excuse me, could you mention the page rather than the slide, please?
Sure. So it's Audit Page 10 of 109. The title of the slide is Internal Control Matters.
Are you, Aviva, are you on the right page? Aviva, I'm not sure if you're on mute. Are you comfortable with where we are? Internal control matters?
Did we lose Aviva?
I don't know if we hear beeps when people disconnect or join.
I just tried to unmute to answer you. I heard you. Yeah, no, when he said slide, I have it on my computer by pages, and the slide section is over. I can move it over. I just wanted to make sure your slides and your pages are the same. I have the pages on the full screen. That's all. I see your slide pages are the same. Fine.
I'll use audit page number here. So it's audit page 10 of 109.
Yeah, I have it. Thank you.
Perfect. So again, this page is really just meant to kind of remind the committee about what our responsibilities are with respect to the engagement. So we are not expressing an opinion on the effectiveness of internal control. Our responsibilities are about obtaining assurance of whether the financial statements are free from material misstatement. With that said, as we go through and conduct our audit, we do consider the internal control implications of any adjustments or things that we find along the way. What we elevate to the committee is anything that we deem to merit their attention, which would meet the definition of either a significant deficiency or material weakness. If we did not feel that the finding merited the attention of a prudent official, then we would just consider that a deficiency, and those are just separately communicated to management and are not included in these kind of communications. With that context, I will transition to audit page 11 of 109. And not to rehash, some of the circumstances that Claire was talking about and that we talked about quite at length back in the January meeting, but I think what our team had to evaluate is given some of the renditions of the trial balance and the need for adjustments really on management's end as they were reconciling things, or as we were just asking kind of questions about, well, how does this new chart of accounts flow through to the financial statements, and just some of those general probing questions. There was a lot of adjustments that were happening, and as a result of that process being somewhat driven by us as an audit team, coupled with, some of the lack of timeliness of that process, we really evaluated whether or not that this met the definition of a significant deficiency or a material weakness. And where we did conclude is that it did seem to meet the definition of a material weakness. Now, we will caveat that material weakness does not result in a change to our audit opinion, but it is something that certainly we are required to communicate to you as a committee, and we've communicated that to management as well.
Ben, this is Elise. Will you be addressing this now or later in terms of the kinds of things that you've put in place to ensure that we can avoid this happening again?
I think I'd rather let Grant Thornton get through their presentation, and then Melinda and I will speak to certainly to this issue and any others that we think are appropriate. But I just as soon give Grant Thornton an opportunity to finish.
Okay, I just wanted to, all right, thank you.
Okay, thank you.
Okay. So I think unless hearing any other questions, I will transition the presentation back to Claire.
Okay, so that actually is the sort of formal communication of the results of the audit of 3Cs, the community colleges for the FY19 period. Again, we will issue an unmodified opinion. We expect to issue by the end of this week or early next week at the latest. So either, I guess, Ben, if you want us to continue with the FY20 planning presentation, we can do that to transition into what our audit plan is for the 3 audits for this fiscal year. Or you can comment now if you want. We can transition into FY20 and then you can comment after that.
Yeah, I think that's best because our most of what we I think have to say is forward-looking and speaks to steps that we're taking internally to address this weakness in the fiscal 20 audit. So I think it's probably better for us to do that in the context of your audit plan.
Got it. Okay. So I'm on page 13, audit page 13 of 109 now. So this is just the list of the team members, just so you know, I'll be the lead engagement partner. And then we have 3 managers, the gentlemen that are on the phone today, Matt McCormick, Brian Hopkins, and Corey Settlebauer. And Brian and Corey have been on the audit last year, and Brian for years past. And Matt, I will say, I'll acknowledge he was actually a staff person on this audit for many years, and then he had a momentary lapse of reason and left Grant Thornton for about a year, but he came back to us this past, I think, winter, maybe late fall, and he will be rejoining the team as a manager on primarily on the university's audit. So we're glad to have Matt back. And then we have our IT audit support, Hassan Khan, and tax partner Dan Romano as well. And obviously there are other staff supporting this team, but those are the key contacts. So with that said, I'll turn it over to Brian to go through some of the plan.
Sure, thanks Claire, and good morning everyone. So I'm on slide page 14 of 109, which is our audit timeline and scope, and this just gives you a high-level overview of the timing of our various procedures, the flow of the audit. So right now we are in the planning and risk assessment phase of the audit. So we've been discussing the scope of work and timetable with management. We're now here with this committee with performing our initial communications to discuss our audit plan. And once we've gone through our audit plan with you and also discussed any potential comments that you have as to the scope of our audit, we'll then finalize our audit plan and start our interim field work, which will be this week. It'll be virtual field work, but field work nonetheless, where we'll be performing walkthroughs of the significant business processes, getting understanding of any changes to the control environment. And then we'll also perform substantive test work over certain interim balances just to get some of that work out of the way before our final field work. which will start in the September timeframe and go all the way through December. We'll first start with the 4 university campus audits. Then we will audit the system office and consolidation. That will start in mid-October and go through the end of November. The community colleges will start in the late September, early October timeframe, and the Charter Oak audit will take place during the month of October. And then once all that is complete, we'll meet back again with this committee in December and hopefully finalize our reports shortly thereafter. Turn to the next slide, slide 15 of 109. So in scoping our audit, we look at everything through the lens of materiality. And so in setting our materiality, we use a benchmark or percentage of a benchmark, one that we would consider to be most meaningful and relevant to users of the financial statements. So in the past, for the universities, Charter Oak and community colleges, that has been a percentage of total revenues. Now, given what's happened this year with the pandemic, obviously there's been a significant impact on the financial statements of many organizations, but particularly colleges and universities. So given that, we will reassess whether we should continue to use revenues or possibly use a percentage of total assets as our benchmark for those 3 audits. And so right now we'll wait to see what those financial statements look like, and we'll make those determinations once we've had a chance to look at those. Turn to the next slide, just a high-level overview of our significant risk areas and other areas of audit focus. And in the following slides, we'll go into more details here on what our specific procedures are to address these risks. But just from a high level, you see, we focus our time and efforts on areas where we deem there to be a greater risk of material misstatements of the financial statements. So we'll spend a fair amount of our time over tuition and fee revenues, grant revenues, which are applicable to all of the entities other than the system office, and then auxiliary revenues, which is applicable to the universities and Charter Oak. We spend also time looking at capital assets, which is applicable to all of the entities. Debt is specific to the system office. And then new for this year, we'll just be evaluating the impact of COVID-19 on the financial statements of all of the entities. And on the following slide, we go into detail on what that means, what we'll be doing to address those risks. And for that, I'll turn it back to Claire to go into detail on that.
Thanks, Brian. So I am on slide or audit page 17 of 109. So this, as Brian alluded to, and I'm sure the committee is not surprised, obviously the impact of the pandemic on the financial statements for fiscal year 2020 will be an area of focus. What the 7 items that we listed on this slide are what I would say are examples of some of the accounting and auditing considerations that we're seeing across the board with, many of our higher ed clients. So not every one of these will necessarily specifically impact the Connecticut State Universities and Community Colleges system. However, we will kind of take a look at each of these items in the context of each of the entities, and some will be more impactful than other ones. So for example, item 5, impact of various federal relief programs. So I'm sure everybody is aware of the financial funding that is being received by the 3 entities from the Department of Education, both the student relief and the institutional relief. We've spent some time working with management around some of the accounting questions related to those grants, as well as some of the accounting for room and board refunds and other sort of unusual accounting and financial events that will be reflected in the second semester financial statements of the 3 organizations. So this is something where because things are continuing to evolve, I wouldn't be able to say right now exactly what we're going to do to audit those amounts that are being reflected in the financial statements. But we will update the committee when we present the results of our audit as to what we actually ended up doing in this area of focus. So, you know, other things to take a look at are reserves for uncollectible accounts. You know, typically those reserves are based on historical experience. However, with the way the economy is going, we may have to consider, or management may have to consider additional factors when we determine what the proper reserve will be. So we'll take a closer look at that during the audit process and report back to the committee when we have the results. So, I got it. Oh. What? So on page 18, I'm going to ask Matt McCormick to go through a couple of the other elements of the planned audit approach.
Thank you, Claire, and good morning, everyone. Thanks for inviting us to this meeting. So I'm going to briefly touch on our identified significant risks for the FY20 audits, and these are areas that we view as being higher risk and therefore have specifically tailored our audit approach to be responsive to these areas. So the first one I'm going to touch on, and again I'm on audit page 18 of 109, is management override of controls, and this is a presumed fraud risk and therefore a significant risk in all audits. So not to say that there's any additional or perceived risk in relation to these entities, but this is something that the professional standards require us to assess. And so we're going to specifically respond to this risk primarily through our journal entry testing and understanding the processes and controls that each of the entities has in place with respect to the creation and approval of journal entries. And because ultimately that's how an individual could impact the financial statements and the ERP systems of the various entities. We'll also just look to understand the design and implementation of controls, such as IT controls, that would be responsive to this potential fraud risk, and then also conduct interviews of key individuals at the various entities to understand, their views on fraud risk and any concerns that they may have. Then moving into our second significant risk area in relation to tuition and fee revenue, and we hit on this earlier as it relates to the the FY19 results for CCC. I feel that our approach with respect to tuition and fee revenue will be relatively consistent to prior years. We're going to look at deferred revenue and AR, and primarily going to do a good amount of testing over student tuition and fee transactions, and then I think kind of a key piece, and as we keep in mind, some of the nuances created by COVID-19 is, working with management to understand the refund process and the processes and controls that have been put in place around that, and then assessing whether there needs to be, there's any additional risk that would require us to look to do some testing of, the payment of those refunds, or if it's just being directly credited to a student account. So I would, just call that out as maybe one area that we're going to need to work through with management as we go into our kind of walkthroughs over the next couple weeks as part of planning. So now I'm going to move into audit page 19 of 109 and specifically talk about technology as it supports the audit process. And so I briefly hit on management override of controls and how that's, just fundamental to, the financial statements ultimately become. And so, technology is key to that, and understanding, the various systems that the entities have in place. So that's Banner for the universities and community colleges, and Genzabar for Charter Oak. Understanding, the processes and controls that the local management has in place there, assessing the various IT risks as well as any cybersecurity risks that we perceive, and then just designing a testing approach that's responsive to the risks of those various systems. I'll pause briefly there and see if there's any questions. Hearing none, I'm going to move on to audit page 20 of 109. So just talking about the work of others. So just again, not to read off the slide, similar approach to prior year. We're going to use our firm IT and pricing and tax specialists within the various areas of these audits. And then, you know, as you're all aware, each of the foundations for the universities, the community colleges, Charter Oak, and the system office all have their own separate audit that's done by the auditor of those foundation financial statements. So we will rely upon those separate financial statements, and we'll confirm directly with them regarding kind of the results of their audits and any concerns they might have with respect to us and our audit of just, you know, the universities, CCC, and Charter Oak. Again, I'll pause and see if there's any questions there. All right, hearing none, I will turn it back to Claire for audit page 21 of 109.
Thanks, Matt. So just to wrap up the discussion around the plan, just quickly, this is really just forward-looking about accounting requirements that are going to be effective in future fiscal years. There's GASB 84 on fiduciary activities, and then GASB 87 on leases. By the way, the GASB had voted to defer the effective date for the lease standard by a year, just to allow organizations one more year to adopt it, just because they knew everybody was kind of focused on dealing with the pandemic. So that was appreciated by all. I'll say last part of the discussion around FY20, that this is meant to engage the committee a little bit, is to just get your perspective on whether you feel there are any aspects of the organizations that may create a heightened risk of fraud, whether it's misappropriation of assets, you know, stealing cash or other assets, or just financial reporting fraud. You know, said another way, adjusting numbers that are being reported on the financial statements in order to represent the results in a potentially more favorable light for whatever reasons a fraud perpetrator might decide to do. So if you think about it in the context of this year, you know, we consider the fact that, or several factors, things like, you know, management is not specifically compensated based on the financial results of the organizations. They don't have bonus programs that are specifically tied to a net income number or something, you know, that we find in other organizations. You know, there's not an incentive for fraud like we would typically see in a commercial or for-profit entity. However, in the times that we're in right now, there are certainly a lot of financial pressures, pressures on budgets, pressures on expenses, pressures on, you know, revenue growth and opportunities, all sorts of pressures that management faces. And there are also most likely changes in you know, the way that operations are functioning. Maybe there's changes to internal controls or processes that had been in place for many years, but now need to be revisited, either because we're in a work from home environment or just, again, because there are financial pressures. So with that said, and acknowledging the role that you play as members of the Board of Regents, you know, I appreciate this is not your day job, although it might feel like it sometimes, but, you know, knowing what you know about the organization and where the pressures may lie, is there anything that this committee, the members of this committee, feels should be brought to our attention in the context of our audit plan for all three entities, where you think there might be, you know, a heightened risk of fraud that you would like us to just pay particular attention to, be aware of, keep in the back of our mind as we execute the audit? And this is a question, I'll pause in a minute, but this is a question that we ask now, but, you know, as the committee knows, things change, things evolve. This is something where if something doesn't come to your mind right now, we welcome your input at a later date, I guess as long as it's before we issue our report in the winter, but we welcome your input at any time during the audit process, you know, as things come to your mind. So I'll pause and just ask the committee if there's anything that you think we should be paying particular attention to.
Claire, this is Elise. And this is directed towards Ben too. The only thing that has come to mind, and I don't have a definitive request on this, but given that so many organizations, including our own, you know, we have people working remotely, I don't know how long that's going to go on. I mean, there are too many, you know, sort of factors that will affect that. I don't know that I necessarily want Grant Thornton involved in sort of assessing that. I'd really, quite frankly, like to have that conversation with Ben and his team to find out sort of what are the kinds of things that we're doing. You know, how have we transitioned to this remote working arrangements? How long do we plan to keep it that way? And I think that's all contingent upon, you know, sort of what happens with COVID-19. So it's difficult. I can't speak for my colleagues on the phone, Joanne and Aviva, but it's difficult for me to say definitively, you know, I think this should be looked at without having that conversation with our own team about sort of what's being planned under various circumstances. And I'm not even certain about how many people are working remotely or how different it is or will be from what we saw last year at this time. I don't know if that makes sense, and Ben, I don't know if you have a perspective on that.
Hi, this is Joanne. Can you hear me? Oh,
Yes,
Ben,
Joanne,
you go ahead. No, let Ben speak, and then I have a few ideas or thoughts.
Okay, sure. Thank you. We are, I mean, I share your concern. I think that it certainly does. There may be some, you know, business practice issues that we should probably evaluate as we go forward. Obviously, we converted to online and remote operation in a hurry. And we were very fortunate to have some systems already in place that allowed us to make that transition quickly. So for instance, you know, we were able to achieve generally a high level of ability to access the protective enclave from people's remote work locations. So people at home were able to, you know, transact business in core, not in core, forgive me, in Banner, inside the protective enclave without having to result in any sort of technical compromises in that regard. But there may be, it certainly is worth a close look to make sure that we haven't had to make any compromises that we should be reevaluating with respect to how we conduct business. So I know, for instance, you know, just that we don't deposit checks as quickly as we normally do, and we've received permission from the state treasurer to do that. But it's probably worth evaluating whether we have successfully managed to stay within our adjusted criteria for that, and whether that criteria is sufficient or whether we should make changes. We are probably going to be in a position relatively soon to evaluate what the future looks like for work at home. We are awaiting guidance from the state as to what their position for state workers returning to work is going to be, although my understanding is that they are leading toward a relatively long duration of people working at home if they can successfully complete their duties at home. That there, you know, continues to be concerns about the pandemic. So I agree that this is an area where we should evaluate and probably work with the auditors to identify some specific questions that that may be raised by remote work, particularly around fraud risk and the integrity of the financial statements. I'll give it back over to you, Joanne.
Oh, thanks, Ben. I just wanted to add that there are so many meetings that we sit on and conduct through Zoom, and many, many different groups everywhere from healthcare providers to manufacturers to small business leaders. And the concern is out there for everyone as far as the future. They're moving forward with an optimistic viewpoint that we will all survive and come through it hopefully stronger and better, but we have no idea what it's really going to look like. We do know that many businesses are still choosing to stay closed because they just don't feel prepared to deal with all the changes that have to be made in their physical plants or operations to deal with this. And then we do know there are a number of employees who are preferring to stay home and not work because they're financially making out better than they did when they were working. So there are many, and of course that's being worked out with the Department of Labor and very helpful and cooperative in that regard. But it is a time of flux and also uncertainty, and in some cases anxiety and fear, although we're trying to keep everybody working together and talking to each other, keeping our distance when we are in public, which is rare, although it could change somewhat. And for many of us, we don't even know about the fall as far as many of the events we have planned and many of our initiatives. So it's a rough time for everyone, and this is what I'm hearing. So I do agree with what I'm hearing, that we just have to keep moving forward to see how things are going, but be prepared for that.
Well, I certainly appreciate all those perspectives, Elise and Joanne, thank you. And Ben, I agree. Let's kind of connect and be thoughtful about what we want to do collectively around, sort of some of the changes in place and how we want to evaluate those in the context of the audit, and to Elise's point, it's primarily a management role. Obviously, as the auditors, we need to assess, and Corey mentioned this before, we get an understanding and assess the control environment. We don't provide an opinion on it, but we do get an understanding. So it's just an opportunity for us to take a look and report back to the audit committee if we see anything of concern. So that really concludes the formal presentation. We did have an appendix with, I'll say, 3 different attachments. One is a series of industry update slides, and I wasn't planning on touching them. If you had a chance to look at them and if you have any questions, wonderful. But really, it was just meant to kind of show the ups and downs, frankly, that higher ed as an industry has been going through, even before the pandemic hit. The credit rating agencies and the changes from negative to stable to positive and back to negative. So it's definitely a trying time. I won't say more than that because I think everybody knows that. We did include, the second appendix is a copy of the draft engagement letter, which I expect will be executed soon. So that's just there as informational only. And then finally, we do, the universities and community colleges, I know, has their own internal whistleblower system and protocols, but we also provide this to our clients in the case it's needed. So that's just an informational item. So that really concludes the information that we wanted to convey today. And just in closing, I did want to just say thank you again to management. I know this past year, especially with the prolonged community college audit, has been a challenge. I guess we all learned from that experience, and I'm looking forward. I think between myself and Melinda and Ben, there's no one looking forward to signing that report more than the 3 of us either on Friday or next week. So I'll be excited when that page has turned, and we're looking forward to FY20.
Thank
Ben,
you,
I don't
Claire.
know if you wanted to now take an opportunity. Oh, sorry. Go ahead, Elise. Yeah.
No, I was just going to thank you. And I in terms of what you included in the appendix, while I know some of the things I was aware of, I was still taken aback by the number of colleges that have closed. You know, sort of, you recognize it's happening, but to see it on paper, sort of, it's still surprising. And unfortunately, I think we're going to see more of that.
Well, I think you're right, unfortunately, Elise, and I'll say frankly that that's already outdated. We know of a few others that have already announced closures, and it's quite depressing, actually.
Yeah.
Hard to watch.
Ben, do you have any comments?
Yes, thank you. Well, I mean, first of all, the state of the industry and the state of the world is highly troubling, and I am the timing of the completion of this audit is unfortunate in a whole bunch of ways, but one of them is that as we get to the end, I'm completely consumed with what's going to happen next year and how to budget for that, which tends to sharpen my focus and give me a new sense of the challenges that we have in front of us. I mean, I hope that, I mean, I'll just say, I hope that CSCU is in a better place to weather some of these storms than many of our smaller private institutions that have, that don't have the fallback of a strong state government and the longtime support of that state government. It hasn't always been perfect, but in general, the state of Connecticut has treasured its institutions of higher education and has supported them, and I'm sure will continue to support them in necessary ways during this troubling time. In terms of the fiscal 19 findings and the weakness that was identified, I mean, it was sort of obvious to all involved. We are, Melinda and I have been very focused on taking steps to ensure that the close and all the preparation of our financial reports for fiscal 20 and thereafter will be significantly smoother. As you may recall, we reported to this committee when we initially disclosed some of the delays. The delays were a combination of factors, the most significant being, in my opinion, the personnel changes that occurred in sort of a bunch. We had the departure of our director of accounting, as well as shortly thereafter the departure of the controller. That left us with a period of critical time when the year-end close should have been occurring, when we were scrambling to replace those two key positions in order to get the audit underway. Now, I will first of all say that the staff, the remaining staff who continue in their roles today, did an outstanding job, in my opinion, of working to advance this process in the absence of that kind of leadership. And their efforts continue to be reflected in this final audit as well. But we've been very focused on addressing that HR concern. I'll talk about that in a sec. Then there are also some concerns that this year, or for the fiscal 19 audit, around the change in the chart of accounts and some of the accounting changed, meaning that some of the procedures that we had used in prior years needed to be modified, and we had not yet done that at the time that the year ended, which put us in a difficult position. And thirdly, we had some very challenging IT changes we've been going through an upgrade, and well, we've now done our upgrade to our banner system, conversion from a hosted to an online software as a service provision of banner. All that is positive in the long run, but created disruption and distraction for many of the people involved. So those three events, I think, led to the shortfall, and we are taking steps now, some shorter term and some longer term, which I believe will address all of those concerns. And I'll talk quickly about it, and then I'd like to have Melinda have a chance to chime in as well. Obviously, on the HR side, which is the area where I think my role is most considerable, we've hired Melinda, who started, I think, in August or September, something like that. So she started after the year-end close had technically occurred, although some of the closing activities were still underway when she got there. Many of them were. So we've hired a new controller, and we are now in the process of recruiting for another position, a director of accounting position, which we hope to hire in the coming weeks. We also have a couple of other positions that we may fill thereafter, but we think it's most critical for us to have not only the controller, but a second highly qualified and experienced accountant to lead our accounting team and to take day-to-day responsibility for the maintenance of the general ledger and closing the books and other things. Also, by having two people with a strong accounting background in the leadership of the department, we are given a greater level of support and ability to recover or deal with HR changes. One of the problems that we had a year ago, frankly, was that the controller, Chris Forster, was not himself a trained accountant. While he was knowledgeable and an effective leader of the department in many respects, he was not in a good position to take over the day-to-day accounting tasks when the director of accounting left. And that might have been, we were certainly at the time looking to recover from that, but then Chris's departure for greener pastures, warmer climes, left us in a situation where our imperfect backup plan was taken out from under us, and we were left scrambling for plan C. Now I think we will be in a position with two strong leaders in the department to have a strong plan A and a strong plan B if one of those folks were to leave. That puts us in a much better position with duplicated capacity than we have been in recent years, and I'm very encouraged by that. The Charter of Accounts change, I think we plowed through that, and I think we are going to be able to ensure that we have procedures in place that reflect the new chart. I'll let Melinda speak to that question when she chimes in. On the last issue around the sort of instability in our general ledger system with Banner and the upgrades to Banner and the disruption that some of that caused, we are going to continue to face some challenges in the area of our financial system over the next several years, although I think the worst is behind us. Although we will likely have another difficult year around Banner over the next several years as our plans to migrate the current sort of multi-institution implementation of Banner that we currently have. We are engaged in plans to transition to a single, less complicated version of Banner for the one college upon accreditation under Students First. So there will be another transition in Banner. However, we will be transitioning from a more complex to a somewhat simplified structure for our general ledger system. I think that will be an easier transition than the one we've recently gone through, although I freely acknowledge that any transition in your financial system is a challenge. We are currently working with the IT department to ensure that the schedule of that transition is organized in a way that is both realistic and will allow us to maintain progress according to plan, but also in which the critical time periods around the close and financial reporting are respected in our plans, and the impact of on the closing process and on our annual audit process will be minimized as we go through that. That's likely to be in a couple of years when that transition occurs. So I think we hopefully will be able to bring some of our efforts around development of human resources and development of significantly improved procedures will have time to take hold before we have to go through another technology transition. So those are the sort of at a high level where the types of steps that we're taking to ensure that this doesn't happen again. But I'd like to give Melinda an opportunity to talk about a little bit more detail on some of the things she's doing in the same vein.
Hi, everybody. So I can, only echo Ben's comments in that I do believe it was the combination of the chart change requiring procedures to be rewritten, coupled with staff turnover and position vacancies, and those IT upgrades that resulted in the material weakness that Claire had described. We do have policies and procedures and measures in place to avoid disruption when turnover occurs. We have a very detailed accounting procedure manual that the system office and the colleges follow. The manual documents daily, monthly processes, year-end close processes, post-close and audit preparation processes. And as Ben noted, many of those processes needed to be reworked, rewritten to conform to the new chart of accounts. Other processes that were previously automated had to be performed manually this year because that process did not work automatically with that chart change within Banner. Now that the documentation for all those processes that need to be reworked, or the processes that needed a more manual process this year have been written and rewritten, I don't anticipate any similar delays for fiscal 20. We are currently testing those procedures right now to make sure that they run smoothly after year end. As Ben mentioned, with the vacancy of the Director of Accounting position right around year end last year, there was no single person really tasked with that kind of level of detailed oversight. And when we do hire the Director of Accounting along with an accounting specialist to fill those vacancies, I believe with my oversight and with the Director of Accounting oversight, we'll be able to really do a thorough review of all the processes, all the procedures and work papers in place and be prepared for next year's audit. I do think, going forward, I don't anticipate any kind of similar delays with fiscal 20, just because of, we went through the process already last year. We updated all of the procedures that need to be updated. And I really do believe that we won't see any similar type of any problems for fiscal 20.
Thank you, Ben and Melinda. Aviva, did you have any questions?
I did, and I spoke to Melinda about them earlier, and I have a question that I can pose to Ben sometime, somebody or the accounting. It's on these deferred inflows and outflows, whether they're negative or positive where they appear. But that's something we can do offline. I'd love to be able to understand what I'm looking at.
Okay. Just wanted to make sure.
Elise, one thing I would like to understand, in the financials, they said that we reduced operating expenses by $5 million. And I wonder if we can see also to what extent have operating expenses been reduced by virtue of consolidations for Student First that have been effectuated in 2019, if any?
Ben, can you speak to that?
Yeah. Yes, I can. Excuse me. I'm on the phone. Sorry about that. It is, we can certainly make an effort to try to identify the extent to which those reductions were related to students first, although it is, I've been working on our correspondence with NETCHI around the progress of our plan. And I'm intimately aware of the difficulties in ascribing some of the changes to students first, as opposed to just the churn of a large organization. One of the things that has been a big factor in our savings under students first has been attrition within the system. We are able to measure attrition in detail by evaluating the changes, all the changes whenever anybody is hired or retired or gets a change in their rate of pay or their job title, or any of the sorts of changes that would impact our spending on people are recorded in Core CT, which is the system that pays everybody and has highly accurate information. And so we've been using reports of changes, personnel changes through Core to measure attrition. And we have done that. I have not yet. We've been doing it in 6-month increments, and I've not yet done attrition in 2020. We would expect it to be pandemic. We amount of information about attrition occurred certainly until 2019. Some of it is
Ben, you're breaking up.
Oh, I'm sorry.
I got the gist of what you said in the beginning. It's just near the end of your comments, you started to break up.
Sorry about that. I'm sharing the internet with a whole neighborhood full of home workers, so forgive me for that. I certainly, I'll repeat what I said. I said that we have good information about aggregate attrition. It's difficult sometimes to comprehensively identify that attrition which is related to directly related to students first, and that attrition which is just the generational change in our workforce. We've made some efforts to do that, and I would be very happy to try to provide some analysis on that question, although it is, we're a big organization with a lot of moving pieces in terms of human resources. So on any given 6-month period, for instance, there will be thousands of transactions in our human resources system, and pulling out in a systematic way those which are related to reorganization and those which are related to just people making life decisions, or taking other jobs, or what have you, is sometimes a challenge, but we certainly will be able to give you some, I think, meaningful information on that score soon.
And do you have to do this for NETCHI as well?
Yes, we do to some degree, although because we have pivoted from I think initially the plans for Students First envisioned everything sort of happening at once, or in a couple of steps, including, laying people off or reducing force at some point. That sort of was on the table. Because of the attrition has been so high, we've, I think, have a sort of a more of a glide path approach in which we utilize attrition to right-size the workforce and make adjustments to things. So it's been a little bit more, our reporting to NETCHI has become a little bit more general in this because we have elected not to, well, first of all, we have a CBAC agreement that prevents widespread job actions, but also because we think it's more appropriate and preserving of the institution and our capabilities right now for us to do it through attrition. So we've changed our reporting to NETCHI. We're working right now, I believe, seeing a new report to NETCHI with some additional information on that score to them. So what NETCHI needs is a little different, although they also change what they want pretty regularly, and we are trying to keep up with their requests.
I see. Okay, thank you. Thank you very much.
Okay, yes, thank you, Ben. And thank you, Melinda. Is there anything else that we need to discuss today? Asking you, Ben.
No, I was just scrolling back to the agenda to make sure I didn't forget anything. No, the only thing that I would mention is that the audit for fiscal 20 is the last audit for which we are under contract with Grant Thornton. So over the course of the next year, we need to make we need to identify and get an auditor under contract for fiscal 21. That process will undoubtedly take the year, but I just wanted to alert you all to that. We will be undoubtedly asking the committee members to participate in discussion and evaluation of our options on that in the coming months. But we certainly we have Grant Thornton under a contract. This will be their 5th audit year for CSCU. You may recall there was a 3-year contract awarded and then a 2-year extension that was added onto that runs us through fiscal 20. So that's something to look out for. And I certainly look forward to having the committee play a role in making those decisions about the best way forward on that.
Okay, thank you. I don't think we have a need for an executive session. So with that, first I want to again thank everyone for participating in today's meeting. Grant Thornton, management, Ben, your team, Ernestine, Terry, Melinda, and all of you have done a remarkable job. I know this has been very, very, very challenging in pulling it together, but we do appreciate all that you've done, and in particular under these circumstances. So if there are no other questions, can I get a motion to adjourn?
So move.
Second.
Okay, can I get a, all right. So we are adjourned. Thank you all.
Thank you.
Thank you very much.
Take care. Bye-bye. Bye-bye.